guys, Sarah Berry CPA here in Texarkana. It has been a while since I've done a video for you guys, but I figured that it is time. As you are aware, I'm sure pretty big bill passed on July the 4th, the One Big Beautiful Bill Act, OBBBA. So you've probably heard some on the news and trying to figure out how it's going to affect you as a business owner. So we have been spending the last 10 days or so digging in, doing some research and seeing how this is going to affect our clients. Our firm specializes in small businesses, and so this video is going to focus on how this bill affects you as a business owner. So the first thing, the most important thing in the bill, in my opinion, as a business owner myself and as an advisor to hundreds of business owners, the most important thing in the bill is the bonus depreciation is 100% permanently. I say permanently in air quotes because in my opinion nothing is actually permanent in tax law, but it's not set to phase out, and that's what is important. So the Tax Cuts and Jobs Act created reinstated bonus depreciation and had been in place years and years ago, and it had 100%, 80%, 60%, 40%. So in 2025 it was supposed to be 40%, which is really comes into play mainly with real estate improvements, cost segregation studies and things like that. So a lot of our real estate investors have been drastically affected by the bonus depreciation that has been declining every year. So it is reinstated at 100% for 2025 and going forward permanently. There is a period of time there from January 1 of 2025 through January 19th of 2025 that if you bought something, it's not going to be eligible for 100% bonus depreciation. I guess because Trump went in office on January 20th, or maybe the 19th was his first day in office, I really don't know. But I guess that's the significance of that date. That's really dumb to me that you have 19 days there where you can buy something and it's not eligible for that increased 100% bonus depreciation. But if you bought it after January 19th, then you're good. So that's the most important thing in this bill, in my opinion. The second most important thing is that qualified business income deduction, the 20% gimme that was created with the Tax Cuts and Jobs Act, that is made permanent now. So it was scheduled to sunset, and that is a very, very big deal. That was created with the Tax Cuts and Jobs Act, where if you're a business owner, you basically, in a nutshell, you only pay tax on 80% of your net income. Now, there's a lot of caveats in there, a lot of things you have to meet, but as a general rule, if you're a business owner, you only pay tax on 80% of your income. Well, you've gotten used to that over the last few years, and so if that had went away, it would have had a very substantial effect on all of our small business clients. So those two things are the most important things in the bill, in my opinion. I'm going to go over a few other things for you in this video, and then I'll do a separate video for individual taxpayers and things that affect them. So third most important is that the 1099 miscellaneous and non-employee compensation, that limit has been raised to $2,000. So it doesn't start until 2026. We're pretty sure about that. It's a little bit vague in the bill, but I think the guidance that's coming out now is in 2026. You don't have to issue a 1099 to the vendors that you use if you pay them $600, $700, $800, $1,999. You don't have to issue them a 1099. You don't have to issue until you get to the 2,000 threshold. You know, previously, if you're a business owner, I'm sure you know this very well, if you pay a vendor for any types of services, anything that includes services, and you pay them more than $600 throughout the year, unless they're a corporation or an S Corp, or there's a few things there, but the general rule is you have to issue them a 1099 in January of every year. So we do a lot of 1099s for our small business owners. That $600 threshold has been the same for years and years. They finally raised that this year. I wish they would have made it implemented in 2025 so that our 1099s we issue in January wouldn't be as many, but I think it's going into place in 2026. So our 1099s we issue in January 2027, we won't have to issue as many. So that's really good. The third thing is the 1099K threshold has been raised to 20,000 and quite a few transactions. The bottom line is we're not going to get 1099Ks for like PayPal and Venmo and all the Cash App and the things that people worry about getting a 1099 if your mom's Cash Apping you some money to pay you back for going to the grocery store or something, you know, like we do for our teenage kids, right? So we don't have to worry about them getting a 1099 for that small stuff. You're not going to get a 1099K until it gets over $20,000. A few other things I wanted to mention. Those are the big things for the businesses. A few other things I wanted to mention. It kind of bleeds over to the individual video that I'm going to do. But the SALT limitation has been raised from 10,000 to 40,000. So what is the SALT limitation? SALT. It is state and local taxes. It is the limit on the Schedule A itemized deductions. So we do not see a ton of that in our particular area because we are in a border city area. We have a lot of Texas clients. Obviously, Texas does not have a state income tax, but has high property taxes. So sometimes even our Texas taxpayers hit that SALT limitation. You can't deduct more than, in the past few years, you haven't been able to deduct more than $10,000 in state and local taxes. So now they've raised that to $40,000, which is really good. There's some limitations on that, but as a general rule, it's went up from 10,000 to 40,000. So that's good. One thing is, there's two more things I really wanted to talk about. The tax on tips and the tax on overtime. So coming from a business owner perspective, what you need to know is if you pay overtime, you need to make for sure that your payroll software is tracking that overtime as a separate line item and has the capability of putting that into a separate box on your W-2. That's really all you need to know for right now, okay? Coming from an individual perspective, your employee that gets a W-2 at the end of the year is going to have their overtime in a separate box, and then they're going to possibly be eligible for a deduction on their personal tax return, which is going to reduce their taxes on their personal return and means they get a larger refund. Again, coming from the employer perspective, you just need to make for sure that your payroll software is capable of tracking that as a separate line item and putting that into a certain box on the W-2. If you are doing your payroll manually, I really hope you're not. I'll shamelessly put a plug in for our payroll software. If you have not talked to us about our payroll services, you really need to reach out. It's more affordable than anything. It takes a huge burden off of you. It keeps up with all of these laws and regulations. But just make for sure your overtime is broken out in a separate box. Same thing with tips. So you get a tip deduction. So again, the tip deduction, the non-taxable tipped wages, is going to be on the employee's personal tax return they file at the end of the year. Okay, what you need to know is your payroll tax withholdings are going to stay the same. You just have to make for sure that the payroll software that you're using is able to break out that tips into a separate box on your W-2 at the end of the year. If you have any questions about that, reach out to us. What I fully expect is that employees are going to start coming to employers. So you may have some team members that come to you and say, hey, I'm getting paid in tips. I get paid tips, okay? Or I get paid overtime. And I heard that this overtime and this tipped wages is not taxable to me, but you still withheld tax on my paycheck. So that's a question I'm expecting. And as an employer, your response is going to be, yes, I am still legally required to withhold taxes from your paycheck, and you still have to pay Social Security, Medicare, federal income tax, and state income tax according to the withholding charts. That has not changed at all. What you need to tell your employee is you're possibly going to get a larger refund when you file your tax return, but your withholdings on your paycheck are not going to change. So I just want to prepare you for that conversation. Again, if you're a monthly client of ours, reach out to us. We'll be happy to talk through the particulars on it. That really sums up the big things that I see that are going to affect business owners that's in this tax bill.